Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. ECB governor see rising risk of rate hitting 2% to curb inflation sources. Prejudices European Central Bank policymakers see a rising risk that they will have to raise their key interest rate to 2% or more to curb record high inflation in the Eurozone despite a likely recession, sources told Reuters. With inflation hitting 9.1% in August and seen above the ECB's 2% target for 2 years to come, the central bank has been raising its interest rates at record speed and urging governments to help bring down energy bills that have ballooned since Russia invaded Ukraine. The ECB raised its deposit rate from 0 to 0.75% on Thursday, and President Christine Lagarde guided for another 2 or 3 hikes, saying rates were still far away from a level that will bring inflation back to 2%. 5 sources close to the matter said many policymakers saw a growing probability that they will need to take the rate into restrictive territory jargon for a level of rate that causes the economy to slow at 2% or above. The sources who spoke on condition of anonymity because policy deliberations are private, say this would most likely happen in the ECB first inflation projection for 20 and 25 due to be published in December is still above 2%. An ECB spokesman declined to comment. The ECB currently sees inflation at 2.3% in 20 and 24, though one source said an internal forecast which was presented at Thursday meeting put in closer to 2% after taking into account the latest gas prices. Dutch Central Bank Governor Klaas Knot and Belgium's Pierre Wojcik were the first to openly talk about going into restrictive territory late last month, at a time when most of their colleagues felt interest rates just need to go back to between 1% and 2%. The sources said policymakers were bracing for a recession this winter and weaker economic growth next year than the ECB's official projection of 0.9%, but some took comfort for the strong labor market, which should cushion the impact of the higher rates they add. At Thursday meeting, policymakers also began a discussion about the tens of billions of euros that the ECB is liable to pay out to banks on their excess reserve now that the deposit rate is positive again, the sources said. Policymakers judged that current proposals, including one for a reserve-tree system that caps remuneration on some reserves, need more work, the source said. One edge decision might still come before the ECB next policy meeting on October 27. I think that's all from me. Don't forget to like, comment, share, and subscribe.